Hello and welcome to another episode of Medicare Madness, where we aim to cut through the myths and pitfalls of Medicare to help you supercharge your career in final expense services and senior services. My name is Peter Walker. I'm the National Sales Director for Medicare for Equita Final Expense Services and the Equita Group. And I'm joined, as always, by my good friend and business partner, Mr. Cole McCoy. Cole is the Regional Director for Equita Final Expense Services in the Midwest, and he's not only a final expense master, he's also a Medicare monster in his own right. We actually are pre-recording this show today, so when you hear it, it's going to be a couple of weeks after we've recorded it. Cole is actually on the road in Florida visiting some of his new agents, and I'm back here in Houston, but leave out to Charlotte, North Carolina to go do some training. Anyway, the interview that we are recording today is with Nick Micheletti and Bill Elsworth. They from Heartland National. They've just released a new product called the Heartland Secure Flex Advantage, and it's a hospital indemnity plan, and it goes hand in hand with Medicare Advantage plans that you guys are selling on a daily basis. And if you're not, you should be calling me so that I can get you trained up and contracted and doing this the right way. But without further ado, let's get to the interview. We're on the line here today with Nick Micheletti, who's the Director of Operations for Heartland National, and he's joined by Bill Elsworth, who's the Chief Operating Officer for Heartland National. And Heartland recently released a fantastic new product called Secure Advantage Hospital Coverage Flex. And in essence, it's a hospital indemnity plan on steroids from what I can see, and we've added it to our portfolio of products, and it just ties in beautifully with Medicare Advantage. I believe you guys are available in over 30 states, and we'll cover that here in a second. But anyways, I'm joined by Nick and Bill, and I also have Cole McCoy, who's on the road calling in from Florida. So Nick and Bill, welcome.
Thank you, Peter. We certainly look forward to being on today's podcast and to share with you, like you've mentioned, the new product that we've recently launched here, the Secure Advantage Flex Hospital Indemnity Plan. And then, like you said, I do believe this product is going to be something that fits very well in that Medicare Advantage market, similar to what you said too. It's we kind of hooked this one up. So it is the Hospital Indemnity Plan on steroids. I liked your reference there.
Well, yeah, and before we discuss the basics of the plan, I just want people to know, a little bit more about your company in general. I mean, Heartland is a fantastic company, and it's always important that agents feel confident and comfortable with the products and the companies that they represent. Can you tell us a little bit about Heartland and where you guys are based and what you guys do?
Yeah, I'll take a stab at that. Heartland, there's actually several companies underneath the Heartland umbrella. There's Heartland Holding Properties, Heartland Financial Group, and Heartland National Life. Heartland Financial Group was the mothership that allowed Chris McDaniel, our owner, to go out and purchase Heartland National Life. It was actually a company called Dixie National at the time, but in today's environment, we thought that name was very unappropriate for what we were trying to accomplish. We changed the name to Heartland National Life, domiciled out of Indianapolis, Indiana. And we started out selling Medicare supplements only. And then we started adding products to the portfolio. One of the products that Nick and I have worked very hard on is our Secure Advantage and our Secure Advantage Flex, which the Flex is as Nick refers to it, a 2.0 product. And we've just had a lot of luck with that. Chris McDaniel started in the insurance business in 1985. I started in 1984 at the same little place up in Trenton, Missouri with the Larry D. Barnes Insurance Agency. And we were just field agents at the time, went out just like all of you guys do, go out and pound the pavement, knock on doors, and try to get in front of people and show them how to better their current situation with our products. So got a lot of field experience behind this product development on the Secure Advantage Flex. It was developed by guys in the field for guys in the field. So we know some of the most important things that agents out there are looking for. They want a good, solid product with good underwriting, good opportunity, and they also want to be paid a good commission. So that's where we tried to bring all aspects of marketing a product to the ballpark when we put this out there. So
yeah, that checks the boxes. I mean, it's definitely important that you guys come from a field perspective, because the things vary so dramatically from state to state, and it's great to have something that covers those gaps when agents run into them. Now, I will tell you, Bill, a lot of the agents that listen to this program nationally don't, first of all, a lot of them are brand new to Medicare. They've just started selling in the past year. Can you tell us a little bit kind of what our hospital indemnity plan is, and why it's important to have it in your arsenal? Absolutely.
So a hospital indemnity plan is what a lot of agents are not familiar with. It's an actual indemnity plan. So Medicare Advantage replaces original Medicare A and B. It doesn't kick them out of Medicare, but it replaces the core A and B program of Medicare. Well, the reason people buy a Medicare supplement is because there's so many gaps and co-payments with original Medicare. So if you have a program called Medicare Advantage that goes out and replaces original Medicare, we try to get agents to understand, guys, gals, there are also deductibles, coinsurance, and copayments through a Medicare Advantage plan. Most people are not aware of that. They think, I got this great new product called Medicare Advantage. I don't need anything else. Well, tell somebody that's went through about 30 or 40 chemotherapy treatments and has to pay the out-of-pocket maximum on their out of their pocket every year when they go back and forth to the doctor. When Medicare Advantage first hit the market, the out-of-pocket maximum was $2,400. That now is getting into the $6,000, $7,000, and $10,000 range, depending on what area of the country that you actually live in. And a hospital indemnity plan is exactly that. If they buy a $600 a day benefit, but their out-of-pocket cost to the Medicare Advantage is $350, we still pay the $600. Every benefit scheduled to this product is an indemnity. So if they buy a $10,000 cancer rider, they're going to get a check for $10,000 upon first diagnosis of internal cancer.
Right. So in essence, these plans, when we're out there writing Medicare Advantage plans, especially in the final expense kind of demographic, the majority of plans we write are little to no cost on a monthly basis. There's no premium involved. But the flip side with that is that there are costs involved with hospital and doctor copays. There's co-insurance for some procedures and things, and you have a maximum out of pocket cost, obviously, as you alluded to, $6,700 in most cases, but up to $10,000 on some of those PPOs if you go out of network. So essentially, what this does is it fills those gaps, right? You can kind of a la carte look at the gaps depending on the plan that you're writing for that client, and offer them a way to fill every single one of those gaps. Is that right?
You're absolutely right, Peter. And I think one of the best ways to look at that is to pull up a summary plan description of the Medicare Advantage plan that you're selling in your area. When you're reviewing that summary plan description or that summary of benefits, and you're going down the list of out-of-pocket costs, you'll see inpatient hospital care copays. So that means your client's going to be responsible for a certain dollar amount for as many days that they're in the hospital. But also, like you had mentioned, there's other out-of-pocket costs. If that client takes an ambulance to the hospital, there's going to be a copay associated with that. If they're in the emergency room, there's going to be a copay associated with that. So a lot of the reasons why we built this plan is to help protect those clients in the instance of a hospitalization. And then we've offered 7 additional riders to even protect them a little bit further. So as Bill mentioned, one of the main reasons one of your clients may hit that max out of pocket is due to the diagnosis of cancer. So we have a cancer rider on our plan that goes from $1,000 to $20,000 worth of benefit to help cover that max out of pocket. And it's got a built-in recurrence benefit with it as well. So if that client gets treated for cancer and they're in a period of remission and potentially get diagnosed again in the future, that benefit can restore and pay again.
That's fantastic. And so what I tell people when I'm selling these plans is, when I'm sitting in front of them, especially people that have that have Medicare supplements and want to look at the Medicare Advantage because their supplement is now $300-400 a month and they don't qualify to roll into something less, it's important to realize that you can essentially create a synthetic Medicare supplement. So in other words, you can end up with very little out-of-pocket exposure by adding one of these plans to plug all the holes of a Medicare Advantage plan for significantly less money. Now, obviously, the downside with a Med Advantage plan over a supplement is you're going to be limited to the network if you're in an HMO. But you can also do a PPO and essentially have the freedom of a Med Sup with all the gaps covered with something like this.
Exactly. Peter, one of the things that I try to get across to agents when I do a webinar training on this is you have a couple of unique opportunities. Number one, somebody turning 65, generally speaking, is going to be used to paying anywhere from $500 to maybe $1,000 a month for their Medicare or for their major medical plan. Well, if you just take them to a zero premium PPO, do you walk away from that additional income for you, the agent, and a better benefit package for the policyholder, and sell them the MA and leave? Absolutely not. You got a tremendous opportunity right there to make a better benefit package and make a really good income for the agent.
Well, that's exactly right? So you're selling, you're writing multiple products. You're putting the client in a much better situation than they were in prior to 65, and you basically using all the money that's available, right? So you couple a final expense policy because 9 times out of 10, that's why we're in the house to begin with.
Exactly.
You put a Medicare Advantage policy and you cover all the gaps. So that client's going to love you because the first time they have to use that Medicare Advantage policy, they might get a bill in the mail from the hospital saying you are $300 a day for days 1 through 6, and they're going to get a check in the mail for $1,800, and they can basically just go ahead and forward that off to the hospital and say, bing, bang, boom, I'm done, right?
Exactly. Another opportunity that agents will run into a lot, just like you mentioned earlier, excuse me, they might be paying $300 a month for a Medicare supplement, and they come to their agent and they say, listen, I just can't continue to pay these premiums. You need to help me solve this issue. Well, if they're used to paying $300 or $400 a month for their Medicare supplement, and you can take them into a zero-cost MA plan, trust me, they're going to be willing to pay $60, $70, $80 a month to make more benefits to that plan. They're used to good benefits. Don't walk away from what the policyholder is asking you for.
Well, let's talk about so one thing that's unique about your plan is you guys have a guaranteed issue period. Is that correct?
Yes, that's right. As our seniors are making those Medicare decisions between 64.5 to 65.5, our plan does come with a guarantee issue period for the base plan and all of the riders except for the lump sum cancer rider. So yes, there's a unique opportunity, a unique window as our clients are aging into Medicare to get them enrolled in a plan like this in which they may have never been able to qualify for in the first place.
So let me get this straight. T65, there is absolutely no underwriting on everything but the cancer rider.
That's correct, Peter.
Holy cow. Okay, now I know a lot of Medicare supplement companies, and I know Cole wanted to ask this question, but I'm not sure if he's still on with us. Oh, you are there. Okay, well, then why don't you ask your question? Because I know you were asking me about it. Okay, it looks like Cole is not there. Hopefully we'll get him back in a second. But I know Cole's question was that with most guaranteed issue policies, with MedSubs, for instance, it's non-commissionable. Is that the same way it works with you guys with this particular plan?
Cole, I'll go ahead and answer that. So no, our commissions are paid at the full amount, regardless of if it's a guarantee issue plan or something that's fully underwritten. So with our plan here, it is a little bit unique in that we do pay full commissions on that guarantee issue business between 64.5 and 65.5.
That's huge. That's huge.
Another thing that we changed on this plan is our old plan, if they bought a $10,000 cancer rider, once they used that, then there was no reason for them to continue to pay the premium for the cancer rider. That's why we put the restoration of benefit on this so that they would still have the incentive to continue paying the original premium because that cancer rider restores back to its original benefit after a short period of time.
Yeah, that is a very unique thing. So it looks here from the documentation you sent. So if you've got a $20,000 lump sum cancer, and let me just say this about cancer, the facts are that today, half of all males and 1/3 of all females will be diagnosed with cancer in their lifetime. That's an actual fact. So you got a 50-50 chance as a male of being diagnosed with cancer. So let's say you've got a $20,000 cancer, lump sum cancer rider, and you get diagnosed with internal cancer. Heartland will send you a check for 20 grand to your mailbox. After year 1, it'll start resetting. So after a year, you get 10%. Year 2, you get 25%. Year 3, you get 50%. Year 4, you get 75%. After 5 years, you've got that full 20,000 benefit over again, because we know that cancer is never cured, right, guys? I mean, it's in remission is what they consider it, and cancer tends to come back. And having that rider renew every 5 years, I mean, literally starts renewing the very next year, is a huge benefit. That's a living benefit.
Absolutely.
So let's, I've got you guys sent me a really nice breakdown for Texas specifically of your plan. And I might just add, guys, if you're listening to this podcast online and you want to get more information about it, please contact me and I can send you the breakdown for your state, assuming it's available in your state. And I will say, I'm looking at the map. Heartland is all over the country. The typical New Jerseys and Connecticut, Rhode Island, that northeast quadrant is not covered, which most companies do not cover, as well as California, Washington, and Idaho. But it's pretty much everywhere else. So if you want a breakdown for your state, please contact me, and we can get that information out to you. But let's look at it's important to know that with a flex plan, as opposed to an original hospital indemnity plans where you pick a lump sum amount. You go to the hospital, they give you an amount. The way flex works is you can say, I want this to pay me $100 a day for 5 days, or $600 a day for 2 days. Is that right?
Not 2.
Well, So
sorry, 3 days is your minimum, right? If I go per day.
Yeah, conceptually, you're absolutely right. So when we designed this product, we based it around that chassis of how much do you want to be covered per day, and how many days do you want to be covered for. So you're exactly right, Peter. You can choose between $100 and $600 per day in $50 increments, and anywhere from 3 to 10 days, 15, 20, or 31 days. So that's how the base plan of this product is built.
And how does that pay? Is that only if you're admitted to the hospital, or do you get paid for observation?
So we actually cover observation as well. So the base plan is based on whether you're admitted to the hospital and how many days you were in the hospital. But we do know that observation is a big thing in today's market, especially with hospital indemnity plans. A lot of times a client may not know if they were actually admitted to the hospital or placed in an observation unit. So with some of the competitors out there, they do not cover observation stays. So if your client's not aware on whether or not they were admitted to the hospital or placed in an observation unit, they file a claim, our competitors are going to deny it. That's something that we used our experience with in this market, having paid for observation days on our 1.0 product. We know it's very important, so we continue to do that with this plan here. So our product will not only cover admission to the hospital, but it will also pay for up to 3 observation days per calendar year, which is very big out there, especially for agents.
That's huge, yeah. And and that's right. A lot of agents don't realize that hospitals, just with cost containment, will keep people in observation instead of doing a full admit. And so just tell me a little bit about what is the claim process for the end user.
So the claim process is actually somewhat unique, but very, very efficient. So we just need to see an itemized statement of services showing an admission date and a discharge date. The policyholder can write their policy number on that statement of services and fax that into our claims department or mail that into our claims department. And that's all we need to see to actually pay that claim and issue a check. So an itemized statement of services and a policy number.
And roughly what's the turnaround time on how long do they have to wait for that check?
That depends on at what point the claim happens. If an agent writes a policy today and then 3 months later they go in the hospital, we're going to send off and get medical records to make sure they questions were answered truthfully. And sometimes that depends on how long it takes the doctor's office to get the medical records back. But generally speaking, once you get through that period, we can turn claims in 7 to 10 days.
So there's kind of a 90-day period where you guys did a little bit of extra legwork to make sure that
there's a 1-year look back. So anytime that the claim, when you sit on the company side of this and you see some of these apps come through and then you get the medical records, it would be easier for you to say, okay, which question on the app could he actually have answered truthfully?
Right. But obviously this is not on the GI business, right? The guaranteed issue business, there's no look back.
Correct. But generally, we're not having a big issue with that. Most agents are pretty thorough when they're sitting in front of the policyholder.
Okay. And then so if I go to go ahead, Cole. Okay, so again, it sounds like Cole's not coming through clearly on my side, but I know where he's going with this. Cole wants to know kind of how the underwriting works with this. How does it compare to let's say a final expense product? What are the knockout questions that you guys might have?
Sure, Cole. Thanks for asking. No, we do have an underwriting guide that can be found at heartlandagent.com. That's going to be your agent portal. So there is an underwriting guide out there with a list of medications that would be a knockout medication if it correlated to one of the conditions on our underwriting section of our application. But right now, our product is simplified issue. So as long as our agents are out there doing the appropriate field underwriting and asking the questions on the application as they're written, then we're going to go ahead and issue that policy and pay commissions on that policy. So it's with.
So you're saying that you submit your application, and then what, does it take a few days before you get the result, or how does that actually work?
It's actually instant issue because it is simplified issue. So we're going off of the word of the agent to make sure that they've done their appropriate field underwriting and asked those questions appropriately. So as long as that client's answered no to all of those questions on the application, we're going to issue the policy.
Yeah, and I will tell you, Cole, I've actually seen the online application, and it is one of the slickest apps, honestly, out there. All right, so let's talk a little bit about issue ages. How old do you have to be able to get one of these?
You have to be 18 years of age. I know a lot of the plans out there you'll see are 40 and above or 50 and above. But I know, Peter, we've talked about this with the environment that healthcare is in right now. When we built this product with our actuaries, we just saw a need where this product could be placed in that younger demographic with a high deductible health insurance plan and the environments healthcare is in. So the product's issue age is 18 to 85.
Wow. Okay. Now, what happens if you buy a product at 85 and you get whoop? Here's my spam calls coming in. I always get interrupted on my podcast with phone calls, and I always forget to turn my phone off before I start. So.
Yeah,
that's my wife calling me.
Yeah.
No, I'm just kidding. But so what happens when you turn 86? Does it still stay in effect if you've got the plan?
Yes, the plan will stay in effect with no reduction in benefits. It's just the issue age tops out at 85.
So until the day you die, right?
Yes, sir.
Guaranteed renewable for life.
That is awesome. Okay, and then I think you guys have a household discount, right? If more than one person's buying, what can you tell us about that?
Yes. So that household discount varies from a state-to-state basis, but typically in all of the generic states, it's a very easy household discount to qualify for. It's a 7% household discount, and the client just has to live with someone no more than 18 years of older, and have resided with them for the past 12 months, or be their partner. So very, very easy to qualify for the 7% household discount.
So you just have to live with somebody over age 18. You don't have to have two policies in the house.
That's correct.
Now, some states require two policies, but that's spelled out on each specific state application.
Right. That's awesome.
There's only a couple of those out there.
Yeah, and so I might also add that the rates are just based on your. It's not even based on sex. It's just based on age, right? There's one rate.
That's right, and they don't increase as the policyholder gets older, so it's best to lock them in early.
Your rate is locked at the age that you get the policy. It's like a final expense plan. That is fantastic. So let's talk a little bit about the riders. I just wanted to dig in a little bit further into that lump sum cancer rider, because I know a lot of agents don't ask about this in the house. But if you start bringing up these conversations in the house, you're going to find out that almost everyone you speak to knows somebody or has a family member that's dealt with cancer in the past, and it's actually a very easy conversation to have. And when you realize how inexpensive these lump sum cancer riders are, you'll write a lot of this business. So specifically, what cancers do you treat, and what is not considered for the lump sum?
Sure. So, Peter, that lump sum cancer rider, as we've kind of talked about, the prevalency of cancer is out there. We all know someone who's been affected by it, a loved one, a family member, or a friend. And we know how it plays in that Medicare Advantage space as well when we look at that max out of pocket. And as Bill mentioned earlier, one of the main reasons our clients who are enrolled into an MAPD plan is going to hit that max out of pocket is typically due to the diagnosis of cancer. So we understand that that's important for our agents and for our clients. So we did have it available at our 1.0 plan, and it went to $10,000 worth of coverage. We souped that one up here on our new product, and now we're allowing coverage up to $20,000. There is a 25% cancer in situ benefit and a 5% skin cancer benefit. So I know a lot of the plans out there, you don't see any benefit for skin cancer. Ours does pay a 5% benefit on that. So we just know that rider is very important, and being able to add it to a hospital indemnity plan when it makes that much sense when you're talking about that max out of pocket on a Medicare Advantage plan. So the simplicity of adding this benefit to our product here, that client's diagnosed with internal cancer, we'll pay them a check right off the bat. And then when they go back into that period of remission, that policy starts to restore and potentially could pay again. And I think you'll find that the premiums on that rider are very competitively priced in today's market. So it's just it's a no-brainer to at least have the conversation and let that client decide on whether they want to add that rider.
Absolutely. So on top of the lump sum cancer rider, you also have a lump sum hospital confinement rider. How does that work?
Yeah, that's right, Peter. And I think that goes back to that younger demographic we talked about. So in addition to that daily dollar amount per day that you select, the lump sum hospital confinement benefit rider offers a lump sum payment in addition to that if you're hospitalized. So you can select between $500 and $2,500 in $500 increments, and that would be paid to you in addition to your base plan. So if you had a $2,500 lump sum hospital confinement rider and you're hospitalized, we'll pay you your base plan and then also send a check for $2,500. And a lot of times that can help in that younger demographic when we're talking about high deductible health insurance plans and fill in the gaps.
Right. And then you've also got the outpatient surgery benefit.
Yes, that's right. And kind of go back to that point on the summary plan description or summary of benefits when you're looking at your Medicare Advantage plan. A lot of those out-of-pocket costs, you're going to see a rider on our plan that matches it exactly. So just like you're mentioning here, we do have a lump sum outpatient surgery benefit rider. So whether you're enrolling into a client into an MAPD that has a $300 copay for outpatient surgery, $400 copay for outpatient surgery, our thought process was build a benefit to allow our agents to present it to clients to fill that gap if necessary.
Yeah, no, and that's right. So, if you look at every Medicare Advantage plan and you go down the summary of benefits, they all match up. Every plan, Cigna's the same as Humana, is the same as United Healthcare. So, and that's how this Secure Advantage plan works. You literally go down the list and just plug in the numbers that you want to cover. I just think that's fantastic. Now, another huge thing, which I think is a very, very important add-on for this product, is your dental, vision, and hearing rider. So explain a little bit about that if you guys don't mind.
Sure. So when we created this plan, we kind of had a thought process of allowing a lot of different riders to meet that individual need of your client. So if cancer was important to them, they could add that rider. If the outpatient surgery benefit was important to them, they could add that rider. But we also understood that in that Medicare market, there was a need for dental, vision, and hearing insurance. So we decided to build in a rider onto our plan that would allow clients to have some dental, vision, and hearing benefits. So they can select that rider to add to their hospital plan, and they would give a $1,000 or $1,500 calendar year benefit that client could use toward dental, vision, and hearing services. So that was the thought process behind that rider. A couple other additional features of it is it pays 60% year 1, 70% years 2, 80% years 3 and beyond. So the longer that you have that rider or have that policy, the more benefit rich it's going to get. But that was the thought process behind it, is adding coverage that we know is needed in that market and being able to add it as a rider to our hospital.
And I see something that's unique over some of the DVH policies that I write is root canals are covered after 6 months, which is, generally I've seen those after a year. But you do have things like bridges, crowns, dentures, extractions that will be covered after the 12-month waiting period,
That's
and that's
incredible.
pretty much standard.
What is so to add on that rider? What kind of premium is that? Just in a generic sense, I know it's depending on is that like a big portion of the premium, or is that just an extra handful of dollars that you just kind of add on and makes a nice little benefit there?
That's a great question, Cole. The premium for that rider varies by state, but typically it's going to be between $32 and $35 a month. So as long as you as the agent knows how that rider works, I think your client can get a lot of benefit from having it. As Peter mentioned, basic services after 6 months, which it does include root canal, and then major services after 12 months. So as long as you're explaining that rider to the client appropriately, you can get a lot of benefit for $32 to $35 a month. And if you guys don't mind, there's one other thing that makes this rider quite unique compared to any plan that you're going to see out there, whether it's a rider or a standalone DVH plan, is that ours pays off of actual charges. So not usual and customary, they pay off of actual charges. So what you get billed from the provider is what we're going to pay off of.
Yeah, and it's important to know for people that haven't written these plans in the past, these are not network-based plans. So this is, you can go to any licensed dentist or vision center in the country and get your work done, and you submit the bill and they pay off that. That's correct with this, I'm assuming, right, Nick?
Yeah, that's exactly right, Peter.
Okay. Yeah, no, that's a fantastic plan. And, I used to run into houses and I'd sell somebody a cancer plan, and then I'd sell them a hospital indemnity plan, and then I'd write them a separate DVH plan. And, the real beauty with this product is it is one product. You can cover all these gaps. And I mean, I just think it's a phenomenal product. So again, guys, if you want to get contracted with this product, we have it available for you today. The rates are incredibly, incredibly competitive across all of those riders, and as I said, it's widely available in almost every state that we have agents in, except for the Northeast. You guys are a different animal up there. But Cole, do you have any further questions for the gents?
Oh man, I have a list, but I don't know how much more time we have. I think it might be a situation.
You got as much time. You got as much time as you want. Man.
No, I mean, the more you guys keep talking, the more questions come up, because I'm very intrigued. A big drawback is just kind of what Peter mentioned. It's if I sell, my phone keeps going off. Sorry. So
that's my wife.
I was going to say, yeah, whose wife is calling?
But a big drawback is if I want to help cover all these gaps, I'm going to have to sell a separate cancer plan, a separate indemnity, a separate DVH. And unfortunately, what happens is we just don't sell it. We just say, you know what, I'll just give you the number to call and let talk to so-and-so. And, we do miss out on those commissions, but sometimes it's just for convenience sake. I hate to say it, but, agents just don't think the way that you should, And so having something where we can interface every single need in one policy will make it so simple for the clients to understand. So I love that y'all are addressing these needs. It's innovative, to say the least, and super helpful. My big questions are, if someone is outside the guaranteed issue period, what are the big health issues that y'all are not going to take? Because I want to be an effective underwriter. I want to train my guys to be effective underwriters. What
You're
does that
thinking
look
like diabetes with neuropathy or COPD, or what's not covered?
Yeah, so we actually take diabetics up to 50 units of insulin. So that's one thing that'll stand out from us in regards to underwriting that our competitors will not. Some of the other big knockout questions would be the use of a CPAP due to a medical condition. So that's one that we see quite often. Unfortunately, we've got great rates on this product, very, very competitive rates. So our underwriting reflects that in the sense of that CPAP, that could be a knockout one. Congestive heart failure seems to be one that we run into quite often, and hospitalized twice within the last 12 months. You can actually be hospitalized once within the last 12 months and still take this plan out, but hospitalization of twice in the last 12 months. So guys, as agents, when you are out there, kind of like Cole was talking about, and you're in the home, if you're selling a final expense policy and that client already has a Medicare Advantage plan, this is a great product for you to kind of open up some conversation. Well, did that prior agent talk to you about the companion plan? No, they didn't. Well, we've got a hospital indemnity plan here that helps fill those gaps of that Medicare Advantage plan. Have you been hospitalized? Maybe that client's been hospitalized in the past year, and they got hit with one of those $1,700 hospital invoices due to that hospitalization, and they're looking for something to fill those gaps. So just talking about a hospital indemnity plan, open up some conversation, some dialogue where maybe you can put this product somewhere that you hadn't thought of initially. But just making sure to have those conversations with your client. Did they present the companion plan? Can open up some doors for you.
Nick, that is a very, very, very good point. And I drill it into my agents. It doesn't matter if you walk into a house and you do your due diligence with the client. I'm talking about a Medicare Advantage appointment. You do your due diligence and that client is on the best plan for them. Congratulate them. You know, what I tell people is make those people your client today. You might not get paid today, but you will down the line. If you treat them with respect and you treat them properly, you will get their business at some stage because these plans change on a yearly basis. But that being said, being able to go through their current summary of benefits with them again is always important. Make sure they're getting all the benefits out of the plan that they're on, whether you sold it or not. And then add this in, because when you go through that summary of benefits with them, Mr. Smith, do you realize that if you go to the hospital, you're going to be paying $265 a day, day 1 through 5? A lot of them don't realize that because the agent that sold them just kind of scanned through it real quick. These people don't realize that they've got the gaps. And fitting a plan like this in, all of a sudden you're making a sale where there was none before. And that is a very, very good point. I'm really glad you brought that up.
One other question. Do you guys have an option for a standalone cancer product?
We don't. Oh, do we have that option in the state of Texas, Bill? Do you know? What? That's our scheduled benefit cancer policy.
I think it is.
Yeah, so Cole, I'd have to double check, but I do believe we have a scheduled benefit cancer policy in the state of Texas available. It's not quite as rich in benefits as you'll see with some of the other scheduled benefit policies out there, but the premium reflects that. But as far as I mean, it's a great point that you brought up because Bill and I are actually working with the actuaries on some preliminary forms to develop a standalone lump sum cancer, heart, and stroke plan that we hope to have out toward the end of 2019. So we do currently have a scheduled benefit, and on the docket, a lump sum product is what we're working on developing now.
Just so you guys know, Cole McCoy is a Ohio agent. He fled Ohio because it got too cold, so he's in Florida for a week playing golf.
I played golf once.
I don't blame him.
Come on, man. Don't throw me under the bus. I am working.
We don't hold it against you. We think you're a smart man for that.
Oh, man.
Exactly.
I'm right next door to you. I'm in Ohio.
Brilliant. Yeah, Cole's up in Mansfield, Ohio. So, but this product is available in Ohio. Cole, you'll be happy to know that
when I get off the call, I literally just had an agent ask me on Friday, I need some good options to offer cancer benefits. The heritage that he and I came from, that was a big part of our selling, was selling. We would do cancer and attach life insurance with the cancer to make money, and we kind of got out because it was a little bit shady, and we figured that out later. However, we still like selling that cancer plan because so many people need it, and we want a good product that's competitively structured and pays the agent well. So this couldn't have come better timing for this conversation I'm getting ready to have. So I really, really appreciate you guys. I think this is going to be an awesome relationship. I'm excited to see what happens for sure.
Nick, let me just ask you one other thing. So on I'm assuming you guys have got some good point of sale materials printed for this plan. Agents can get some flyers or things to go over with their clients.
Yes, Peter. I've got a housed document library with a bunch of materials that I can distribute to you. So as those clients or as your agents request them, I'll share them with you, and then feel free to hand those out. So certainly.
That'd be great. That'd be great, guys. Well, I appreciate you guys coming on. I personally endorse this product. I think it's a wonderful product. I think it's an industry leading product, quite honestly. So if you happen to be in one of the states where this product is available, run, don't walk. Give me a call. Get yourself this product in your bag, because it's a no-brainer as far as I'm concerned. And I'm sure we'll have you guys back on at some stage, and I look forward to working with you.
Hey, Peter, going back to your example you used on the hospital benefit of a Medicare Advantage plan, one of the things that I've had a lot of success with is when I come to that, say they're paying $350 for 5 days out of their pocket, I'll kind of pause right there and I'll say, now, Mr. Jones, what that means is you actually have to pay $1,750 out of your pocket if you're hospitalized 5 days under this plan. And then I just pause and I say, but Mr. Jones, I really don't want you to worry about that, because I'm going to show you why you're not going to end up paying that. Just don't let me forget it.
Right. So assume the sale is what you're saying.
Yeah. Just plant that seed early. Anytime you hit a big benefit of that policy, I always tell them that our clients don't have to pay those, and here's why. Just remind me at the end. And I guarantee you at the end of it, they'll say, well, when I say, well, do you have any questions? That's the first thing they'll say is, well, you're going to show me how not to have to pay all those co-payments.
Right. And I think an important thing to realize is, as final expense agents, when we're in the house and when you had that prior final expense chat with people, $50-$60, they make it feel like it's the last dollar. In some cases it is. But when you're talking about healthcare, it's a completely different thing. They've got a different budget in mind for healthcare than they did for final expense. And you cannot assume that they're not willing to spend, $50-$60 on a fully loaded plan like this to cover those gaps, because a lot of these people have dealt with these issues time and time again. And so if they qualify for this, for a lot of them, it's just going to be an absolute no-brainer. Well, anyway, gentlemen, I think that about wraps it up. But I'm sure we'll have lots of agents interested in this product, and we'll get you guys some business. I'm sure of it. And I really appreciate you guys spending some time with me today. So once again, my name is Peter Walker. I'm the National Sales Director for Equita Medicare. If you're interested in any of these products, or if you're interested in supercharging your final expense career and really taking it to the next level by adding these Medicare products, please feel free to reach out to me. You can call me directly at 818-201-6979, or you can email me at p.walker@equita1.com. I'll be happy to speak to you, whether you're contracted with us or not contracted with us. You're more than welcome to come and do your Medicare with us, and we will support you as best we can. Again, that's p.walker@equita1.com. My cell phone number is 818-201-6979. It's always the best way to reach me, because I'm traveling around the country constantly. But thank you so much for your time today, and we look forward to seeing you next week.